All right, what's up guys? Anthony here, Special Analysis. Welcome to the video. I want to dive into a deeper understanding of volume, okay? I told you guys I was going to do a back to the basics video series. I can attest my entire trading career to two things: volume and price action, okay? Now, have I been distracted throughout my career looking for the holy grail, looking for an easier approach to trading? Of course, we all have, right? Like if we could find this program that would do it for us, like we would do that because it's just easier. The fact of the matter is the market is dynamic, meaning it changes constantly. And the only way to remain dynamic with it is to put the screen time in to have this full deep dive understanding of what is happening, right? Now, I am a massive proponent of volume and price action. I say it every video, okay? The software products that I offer are built around two things. That's volume and price action, okay? The Hawkeye software you can use on traditional candlesticks, on TradingView, TradeStation, NinjaTrader, and MetaTrader, okay? And then the Profit Pack takes this and kind of condenses it into a Renko-style print so that it's easier for the trader to see if the market is chopping or if the market is trending. Now, the Profit Pack is designed to be used under trending market conditions, okay? The market's not trending, the Profit Pack you're not going to benefit from it. Okay, so I always recommend my clients run them side by side, because if we have trending market conditions, the Profit Pack is going to make it very clear to see that. If we have choppy market conditions, the Profit Pack is also going to make it very clear to see that, but it's going to be hard to navigate the chop if you're willing to take smaller intraday trades, okay? So let's kind of talk about this. This is the S&P 500. This was all done live this morning in person with my clients. We cover the NASDAQ, the S&P, light sweet crude oil, and gold, all the futures markets, okay? I only trade futures. And I dive into each one of these markets intricately when we get together at 8 o'clock every morning, kind of laying the foundation of what the expectation in the near term could be. And then as price continues to evolve, I continue to update them on my thoughts and my analysis. Now, some of you are going to go, do you have a Discord? The answer is no. The reason I don't have a Discord is because for me to take screenshots and type up everything that's happening constantly so that you have a full understanding of what's transpiring, when, where, and why, would be totally counterproductive for both myself and for my clients, okay? I only work with folks who are serious, okay? This is not entertainment. This is just downright analysis, interpretation, expectation, so the trader can employ their own trade plan, their own risk management, and decide if this trade is right for them, okay? I'm not here to tell you where to buy or sell. I'm not here to tell you where to place your stop. I'll tell you what techniques work for me, and then you can ultimately decide what you want to do. So, as we got together this morning, let's dive into the analysis here. You could see the S&P 500 was trending higher, right? Making higher lows, making higher highs. The majority of the volume is all buying volume. We have a nice higher time frame bias here to the upside. We have current time frame looking nice and strong. Now, looking nice and strong until we reach this specific level. Okay, so we get together at 8 o'clock. I jumped on the mic a few minutes early because I saw this transpiring while I was getting ready for our session. If you notice the volume down below, okay, this is Hawkeye volume. I've been using Hawkeye tools for over 10 years, okay? If you notice the volume here is increasing, but notice we have a small bar with moderate volume. We have a large bar with higher volume, and then we have a much smaller bar with even higher volume. This tells me a couple things, okay? The buyers are getting either exhausted and have no more interest in buying, or the buyers are getting absorbed. So this thing, it's something called absorption. If you understand what order flow is and you have an understanding of what absorption is, this is what absorption looks like, okay? Buyers are pushing, and sellers are soaking up all the orders here. Same thing here. We have lower volume, and no advancement in price. Very specifically, these two candles tell the big story. You have increasing volume, and you have decreasing candle size. We get absorbed for 3 minutes. We get absorbed for another 3 minutes. We actually start to increase in buying volume, and we continue to get absorbed. That tells me what? Hey, Mr. and Mrs. Trader, the buyers have lost their ability to overtake the sellers at this point. There's an imbalance. Aggressive sellers are likely stepping in, and we're going to get a pullback. Now, what else triggered me to recognize that? I want you to notice this candle right here, very specifically, that printed at 7:36 a.m. Eastern Standard Time, New York Eastern Seaboard Time. If I scroll the screen out before the session, right, before the opening session, this is the highest volume print since the Globex open at 6 p.m. Eastern Standard Time up until this point in time, okay? Things change, obviously, once the opening bell happens. So I notice that there's an extraordinary presence of sellers here, right? So if sellers got short here, where do you think their stops placed? Right there. Okay? So what do you think the market did? Huge selling, right? The sellers get absorbed here. Buyers push back in. Those stop orders get consumed, right? What do you think the other side of these buy orders were, right? They got consumed. That got absorbed, or absorption is the technical order flow term, and then price sold off. Wonderful, okay? This was very easy to identify based on the price action and volume that occurred at 7:36, the price action and volume that occurred at 7:45, 7:48, 7:51, 54, and finally 57. And then 8 o'clock, we started selling off. Where do you think we're going to sell off to? Okay, I have a printed level right here that if we broke this pivot, which we sold into it, we pop back up, continue to sell off, that this is where we were headed, okay? More importantly, we were headed to the rolling VWAP. I use two VWAPs, a fixed session VWAP and a rolling VWAP. The rolling VWAP I use is the 4 hour, okay? I heavily lean on those two VWAPs, the volume and the price action outside of everything else, okay? The fast moving averages, you know, this is just to confirm the trend. The MACDs also to confirm that the momentum in place, that's all lagging, right? I really care about the volume and the price action. And I do know that price has a very strong reaction to the fixed session and the rolling VWAP. This orange line is the rolling VWAP. So at the rolling VWAP, what happens? Huge aggression of buyers come in, right? Big candle pops up here. All right, next bar, all right, the volume subsides a little bit, but we continue to advance and close higher. Next bar, the volume continues to decline. We still advance higher. Next bar, volume declines even more, and we're starting to stall, right? Next bar, we get a little push right into this supply area or this resistance zone, and then guess what? Volume starts to drop off, and price starts to roll back over. Roll back over to where? The rolling VWAP. You can see we stalled. Fixed VWAP is right here. And you can then see we've really just been playing this kind of crappy sideways game all afternoon. Now we have Powell speaking at 1:15. So whatever comments came out, you know, around 1:30, clearly the market had some form of reaction to it. But listen, if you can interpret two simple things, volume and price action, it was very easy to see that this area right here was just consume whatever orders were sitting on top of this very specific candle, and then the market sold off. And it was also very easy to see and read that the market here, if it didn't take this area out, which it didn't, it respected it perfectly, the market was then going to sell off again. And if we broke this center line, which you can call a neckline if you would on a double top, that we would likely advance further. And if you notice, that neckline was retested here, the market sold off. It did close above it one candle and then did continue to sell off once again. So from between 8 and 9 a.m., just having a full understanding of what price action and volume we're doing can take on everything you need to know about what's likely to happen next. Guys, you don't need to low risk, high probability trades driven by volume and price action. That's all you need. Okay? We saw and interpreted this live as it was happening, that there was no more interest for the buyers to take price higher. We sold back first to that pivot for 30 ticks and then to the rolling VWAP for 58 ticks. Guys, one trade, you can be done for the day, right? If you take your first trade of the day and it is a successful trade, a profitable trade, you more than cleared your daily goal, what are you trading more for? Right? Trading is a vehicle. It's a means to income. It's not a means of entertainment. And so many people get caught up in that. Right? It's not a means of entertainment. Go for a walk, go play golf, go ride your motorcycle, take the dog out. I don't know what else you have to do. But if you are coming into the market and you are taking very efficient, very calculated, low risk, high probability trades, and you're getting them early in the morning, guys, you should be packing it up and being done. Yesterday morning, Monday morning, I took a trade at 6:45 in the morning. One trade. It was profitable. I took profit at two different spots and I got stopped out on the balance of my trade. And I was done. I didn't place another trade. Today, if you watch the video I posted right before this one, market was a little choppy. I had to fight to get my day's pay. Did I get it? Yes. Was it a pain in the ass? Yes. Okay? Every day will be different. You as the trader have to be the variable. You are the holy grail. Not an indicator package, not some piece of software, not some auto trader, not some whatever, okay? Indicators are designed to help you grow as a trader. At the end of the day, nothing matters other than volume and price action, okay? Understanding them, when it comes to price action, it's what's printing on the screen, it's higher time frame analysis, it's looking at multiple time frames, it's understanding chart patterns, it's understanding why the candle's doing, what it's doing, when it's doing it, why it's doing it, and then relating that to the volume. The volume that prints on the bottom of your screen is your starting point to saying, okay, can I put a thesis together about what's happening in the market? Right? Then, as soon as you have those components in place, then we layer in something called order flow. What's order flow? Order flow, we're going to look at liquidity in the market, where liquidity orders are sitting. We're going to look at the tape, which is called the time in the sales, as they're actually printing. All right. Volume profile, delta profile, the footprint chart, delta in each candle, bid ask. Listen, you can go as deep as you want into the process of understanding the intricacies of each and every one of these candles if you so desire to. But none of that matters until you understand the relationship of what's printing on the screen and the volume printing below. And the reason that I use Hawkeye, the reason that I have worked with them for many, many years, I'm a paying customer, okay? I didn't get free software, all right? I paid for my software. I'm a paying customer. I've taught for them. I've done presentations for them. Why? Because I know that volume and price action are the only two things that matter, okay? I went on to bring to market what's something called the profit pack. What's the profit pack? The Profit Pack is a volume-driven price action cleaning software. It takes all the price action and it prints in a Renko style bar so that it's more clean for a newer trader or an existing trader to kind of see the pattern. Right? Now, some people trade that software all by itself, which is wonderful. Focus on it, build a trade plan, trade it all by itself. Some people use it as a tool, saying, okay, I have it on another screen, I'm watching it print, and I'm comparing it to what I'm seeing here. I'm putting all the pieces of the puzzle together, right? Trading is not one specific thing with the blinders on. If I do ABC, I'm going to get a result. No. It's computing. You know, I got 3 screens that I'm computing at all times to have a full understanding of what's happening, when, where, and why, so I can take the lowest risk, highest probability setup. And guys, this is exactly what we identified live this morning as I turned the mic on in the analysis room. I said, hey, let's take a look at the volume. Let's take a look at the price action. This looks weak, okay? This looks like it's going to fall back to this pivot. If it breaks the pivot, the rolling VWAP, price pushes back up, okay? We identify it based on looking at the volume below, and then we very quickly see that there is no more volume or no more buying interest here to break this prior high, and the market sells off. Now, just as it did on the S&P, it did on the NASDAQ as well. So, if you're trading the NASDAQ, I am a huge proponent of doing what? Looking at the S&P, okay? The S&P does trade more contracts, more liquidity, okay? It does. The S&P will have an impact on the NASDAQ. Here's the NASDAQ, right? Right before 8 o'clock. Here's that big selling candle. Market pushes up, consolidates, sells off to this level, sells off to the rolling VWAP. Identical to the S&P 500. Market pushes back up. Guess what? There's no new volume surge here to take price higher. Guess what the price does? It sells off. Later in the day, I want you to look at this. Guys, look at this. If I just take this here, let me see if it'll let me do this without making it a whole big mess. Watch this. The entire day, we reacted to this level. Once, twice, 3 times, 4 times, 5 times, 6 times, okay? Notice, the more times this level got hit or tested, the more price was able to penetrate through it. Right here, we traded above it, closed inside of it, traded above it, closed below it. Traded at it, closed below it. Notice each time we were placing what? A higher low. So every time we chipped into more of these orders sitting here, we were able to place a higher low. Well, then we got Powell making his statements, and you can see that the market sold off. But imagine just having a full understanding of what's happening here, made it very predictable to say, oh, we're not going to be able to take this area over too easily at 10:12, and then again at 11:27, and then again at 11:54, all the while understanding, hey, we are creating higher lows. There's a pretty good chance that we may start to penetrate this area. Maybe we do, right? We came back in, maybe we push through this later in the day. Who cares? All you needed, very specifically, was to identify the lack of buying interest here, take a short to the prior high for 120 ticks. These two levels here, 138, 151, and the rolling VWAP at 189 ticks. You're done for the day by 8:30 in the morning. That is how efficient it should be. So if you're not focusing on volume and price action, I encourage you to. If you enjoyed this video, I simply ask you to like it. If you haven't subscribed to the channel, please do so that you see new videos coming up. I'm going to go in depth through volume and price action, back to the basics. I'm going to do an entire series and lay the foundation for each and every component that I personally use. God bless, guys. I appreciate you watching this video. I will see you in the next one, and have a phenomenal day.